This is the weekly economic and market update for the week ending November 18th, 2022, and I look forward to November 21st. And just some opening comments. We had the Biden administration and their attempt to buy votes before the election. They've been taking down the strategic oil reserves, and by virtue of doing that, you can only go so far. You can eventually run out of reserves, but that's kept the oil prices down artificially. And once this thing starts to go again, I think you can look for some of the prices in oil to go up. And if we continue, we'll take a look at this a little bit later. But if you look at the U.S. dollar, it's been slowly kind of making its way down. Now, milkshake theory that I've talked about, you can look at one of the other episodes that I have on that. And Brent Johnson still has the dollar going up. When that happens, how that happens, or if it happens, that'll change things too. But we also had the administration trying to forgive student loans that got taken out by one of the courts, and now apparently he's today going to take it to the Supreme Court, and I don't think he'll have much luck there. Spend $400 billion. I think it needs to go through the representatives. We're not a dictatorship here. So let's also talk about probably the big news of the week. The market didn't react much the whole week, but unless you're in the crypto market. But let's talk about crypto and Sam Bankman, Fried, or whatever his name is, SBF as he goes by. There's a CZ in Binance, so you have all these kind of funny initials that we have running around. This is a guy that is going to go to jail, hopefully. I empathize with the people that are in the crypto space. It just, where Bitcoin you can only make so many. With a lot of these other tokens, you can just print away. It's no better than what we're doing with our with the U.S. dollar. Just kind of make up money as we go. And I think this is a sign of kind of the times that we're things are getting frothy. I've seen this happen before, multiple occasions, but talk about the dot-com bubble, where people were investing in dot-com companies and they got way overpriced. You had Bernie Madoff around the time of the Great Financial Crisis, with the housing. I'm actually going to I have a new channel that I put out called The Dumbing Lens, and I'll cover some of these broader issues on that channel, on that YouTube channel. But and again, I'll put a link down in the description for that. I'll probably post sporadically there. It's not going to be something I post every week. But with the great financial crisis and housing, it was a bubble. It was created actually by the government, which I'll get into on that channel, and not greedy banks, although banks were greedy. It wasn't just them. The situation had to present itself, which caused a whole bunch of things we're seeing today. But anyway, that's kind of a look at what we've seen. We got this crypto excess. I think there's something else that's going to break here ultimately. I don't know whether this is the catalyst, this being crypto being the catalyst to something else breaking, but things are fragile right now. So we'll see what happens. So let's take a look at the investor sentiment that I show every week. We've got this comes out every Wednesday night, and it stands bearish at 40.2%, bullish 33.5%. neutral at 26.3%. And you can kind of see it's been kind of going back and forth here. It can't seem to make up its mind which way it's going to go. And also taking a look at another type of investor sentiment, we look at the fear and greed index. People are pretty greedy right now. If we would have gone back a little over, probably 6 weeks ago, this was running like 19, where there's extreme fear. So these things kind of change on a dime. And again, I think these are very strange times as we are moving through a bear market. Let's look at the economic calendar. We look at some of the things that talked about the reporting on that happened this week. We have the PPI came in pretty much, a little bit lower from 0.4 to 0.2 percent. It's kind of, riding along, and as long as it doesn't get too crazy, then I think you'll see some relief from the Fed, which we'll talk about in my final comments a little bit. Retail sales came in fairly strong, 1.3% for how bad things are right now. But, if we look back a little bit, kind of see it's just kind of hanging out there. Nothing great. Here we go here. And these numbers from COVID, we got all locked down, then the comeback. Let's see what else we have here. That was retail sales. It was a pretty boring week, actually. Housing starts were down some. Building permits, 1,526,000, still kind of making its way down. And let's see, we also had existing home sales. The only other thing I probably would mention about the whole housing industry, it's hanging in there. It's still, it's still going down, and that's to be expected because of the mortgage rates. And you can see mortgage rates here, the 30-year mortgage, 6.9. I think I saw earlier today, though, this number is down now to maybe 6.7% or something a little bit lower. So, as we get some relief, we will, hopefully as the 10-year goes down, then we'll start to see, take a look at the 10-year. The 10-year Treasury, still pretty high, 3.827. I'm looking for either a break above 3.9 or a break below 3.5, where we can start to see, which direction this thing's headed. It looks like it may have peaked back in October. But, the other thing to keep an eye on is the dollar. We had a couple of reductions in the strength of the dollar. It's still fairly elevated at 100, almost 107. And it seems to be flattening out here. Now, where does it go from here? Will it go back up? Does it go back down? We'll just have to see what happens. If it goes up, then products that we buy from overseas get less expensive. If it goes down, we start to see more inflation. But that then will help the stock market and the 10-year and a number of other things. We've seen a steady decline in the crude oil prices. And again, we've been tapping the strategic oil reserves, so this being down is expected. The market was just nothing this week. Look at the last 5 days. Started here, ended here. So it really hasn't moved a lot this week. There's been no big news other than the crypto, and it doesn't seem to have started anything, but it could be a delayed reaction too. There may be something coming out of that. The only thing I want to kind of introduce is this put-call ratio. So how many people, puts are basically an item where a tool used in options that if you're betting basically that stocks will go down or a stock will go down to a certain level, and calls, then your expectation is that things will go up if you're buying those. If you're selling them, you're on the opposite side of that. But right now, the put call ratio is at 0.824. Now, one doesn't mean that you have an equal amount. What this means is that actually zero point 0.7 is kind of the number, if you will. That's equal. If it's above zero point 0.7, that means you have more puts than calls. But we're not high above. When it gets real high here, this is where you get these squeezes like we've had in the past, where a lot of puts are out there, and then they get squeezed out, and so they have to buy their stocks back. But it's just something I may make mention of on occasion if this gets crazy one way or another. So let's take a look at next week as far as the economic calendar. Whoops. Let's go back and we'll look at next week. And again, it doesn't seem to be a whole lot of things. We got durable goods orders coming up. We got new home sales. Um, so another thing there, we're going to have some FOMC minutes. I think people are kind of getting tired uh, of the Fed. I certainly am. I wish they'd just go away. But so that's kind of a look into next week. Not a ton of market movers, but if something comes up, I mean, that where something really changes, or this contagion with crypto kind of starts to play its way out, then we'll take a look at those things. So my final comments, we're looking at the Fed raising in December half a point as opposed to the 3/4 of a point. That's the expectation. I don't know that the Fed has actually said that. And my belief is that I think the markets don't really care anymore. It's going to do what it's going to do. And I think I'd be watching more the 10-year and the dollar to see what they're doing to get an idea of what the market's going to be doing. And so that's just one of the final comments I want to make here. I think the market runs. That's not a trading call. That's just my gut tells me that the market's tired of the Fed, and so we're also at the end of. And I want to kind of make this a mention in the final comments. If you haven't read the book The Fourth Turning, it's by Neil Howe. We're at the end of a fourth turning. So turnings are every 20 years. There's four. The fourth turning is what we're in now. Expected to end in the year 2030. And there's a lot of things that happen. And if you just look back in time, go back 80 years, we're in the middle of World War II. Go back 80 years from there, we're back in the Civil War. We go back 80 years from there, we're in the American Revolution. So there's this, Neil Howe, in The Fourth Turning, writes about kind of what's happening, in our society, in our economy, all of those types of things. And it's a good read. So you can kind of, it's somebody's forecast, if you will, of things that will happen in association with things that happened in previous 80-year lots. And, you have kind of the first turning was an awakening. You had an unraveling, you have a crisis, and now you're in the you're at the end. You're in the fourth turning, and so we're going to see a lot of change. And I don't think there's many models, especially in the market, that can forecast what's going to happen. Yeah, I know a lot of people are going to go back and they're going to say, well, here's what happened in with the and I'm guilty of it too, the great financial crisis, the dot-com, every one of these things is different, when they start to collapse. But there will be, it's almost a reckoning, if you will, and that could be a good reckoning and a bad reckoning. But if you can tell, go back 80 years each time, it ended in a war. So it's just something to kind of have in the back of your mind. I'm kind of a prepper, So I want to be prepared. Generations did before us. We quit doing these things because life got easier, right? So we never really prepared, with food or, what we're going to do if such and such happens. And um, I hope nothing happens, but I always think it's a good idea to be prepared. So that's what I wanted to cover this week. And remember, there is always a better way.